So you received your first royalty check. You look at the check and you understand the bottom line figure, but how do you know if it's correct? The names and numbers on the check stub might as well be hieroglyphics. Not anymore, because today I'm gonna give you the Rosetta Stone for reading oil and gas check stubs. So stay tuned and learn something. Howdy folks, my name is Steven Hatcher and welcome to the Minerals Guy channel. On this channel, we share tips on minerals management, mineral valuation, and how to maximize the value of your mineral rights. I acquire and manage mineral assets for a living. I'm also an oil and gas attorney with over a decade of experience buying, selling, and developing oil and gas properties all across the country. I created Minerals Guy for folks just like you to help you better understand your mineral assets. If you're getting value from our content, be sure to hit the like and subscribe button so that you get notified when we post new videos. In this series, we're covering mineral rights management and we're teaching you how to manage your minerals like the pros. This is part 5 of the series and we're talking about how to read oil and gas check stubs. So let's dive in. Okay folks, so it's gonna be a whole lot easier for me to explain how to read a check stub if we're looking at one together. So let's jump over to my computer screen and look at one together. All right, folks, so we're jumped over to the screen share and we're looking at a check stub from Samson Exploration. These properties are actually located in Laramie County, Wyoming. Samson is based out of Tulsa. The first thing that I'll point out is that every operator's check stubs could look a little bit different, but they all have the same basic information, right? And we're gonna review that information together and I'm gonna show you how these check stubs are organized. So the first thing that I'll note is that there's gonna be a line in here for every single oil and gas well that you own an interest in. And this check stub is actually, 20 something pages long because we own an interest in a bunch of wells there. But we'll use this first page, this Chassenay 9-16-2-1CH well, right, as our example. And we're gonna read this check stub from the left to the right. Here's what we're gonna cover. We're gonna cover production month, what does that mean? We're gonna cover well names, product codes, your decimal interest, your interest type, unit price, volume, gross and net, value, gross and net, taxes, which are severance taxes, deductions, which are very important, and then your net value. So let's dive in and we'll look at this Chassenay well. So the first thing to note, right, about the Chassenay well and about check stubs in general is the sales date, right? And it's gonna give you a month and it's gonna give you a year, right? So this is the date that the oil and gas was, or the month rather, that the oil and gas was produced and sold. In this case, it was November of 2022. Now, the important thing to remember is that most operators pay royalties 2 months in arrears, right? So I would have actually received this check in January of 2023 for November 2022 production. All right, so next to the production month, right, we have the well name, right? And you'll notice that the way that this is organized, the property name is listed above and the county name is listed below. So this Chassenay well, there's the full well name with the numbers, is located in Laramie County, Wyoming. So if we move over to the right from the well name and the county name, we see a P and an ST. Well, P, we can see up here, stands for product codes, right? And ST stands for state, and you can see that these wells are located in Wyoming, right? When it comes to product codes, there are 2 primary products from oil and natural gas wells, right? The first is crude oil and the second is natural gas or residue gas, right? But a lot of times as the natural gas is processed, right, there are other products which fall out of the natural gas stream which can also be sold, and those include plant products or NGLs, condensate, and I believe that this actually stands for drip condensate. But it's important to see when you're looking at the check stub, right, which product are we talking about? In this case, we're talking about oil because we can see that we're talking about product code number 1. So if we move over from product codes, we get to your decimal interest, right? And this is one of the most important components of your check stub. You want to make sure that your decimal interest is listed correctly. We talked about decimal interest when we talked about division orders in a prior episode. So if you have questions about your decimal interest, exactly how it's calculated, go back and watch that episode. In this case, you can see that my decimal interest is 00056,597. Now, if we move over from there, we can see DOI type, right? And basically, this is not that important for mineral owners, but this is a revenue interest, meaning that there are multiple decks that the operator is going to maintain. One of them being the working interest deck, who gets billed, and the other being the revenue deck, who gets paid. And in this case, I own a royalty interest, so I'm being paid. Now, interest type refers to, and if you refer to the legend up here, you can see the different types of interest in an oil and gas well, right? So overriding royalty interest, which is what I own here, production payments, royalty interests, which is what are going to be most common for the folks watching this video because you're going to be a mineral owner, and also working interest owners. Working interest owners are the parties that pay to drill the oil and gas well. Okay, if we jump over from interest type, we get over to unit price. And we also, for gas, it will give you the BTU content of the natural gas, right? So in this case, on the Chassenay well, this is crude oil, right? We can see from the product code that's listed right here. And we can see that the unit price that we received for this month was $78.74. Now, the important thing to remember when it comes to price is the prices that we see flashed on headlines, right, is typically going to be the NYMEX WTI spot price at Cushing, Oklahoma, right? And that price might be different from what I'm actually being paid on, right? And the difference between the NYMEX price and the price that I'm being paid on is what's known as your differential. In this case, our crude coming out of Laramie County, Wyoming typically trades at a deduct of between 3 and 5% lower than WTI, right? So that's something that's really important to remember, is that the price that you're being paid on here, whether it's for oil or natural gas, could be different than the NYMEX pricing. Okay, so now that we've talked about pricing, we're going to move over and we'll start talking about volume, right? So what you can see here is property volume and owner volume, right? So this is the total amount of crude oil that this well produced. So what we can see is that the Chassenay well in November of 2022 produced 668 barrels of crude oil, right? Total, gross, right? And what you can see is that this is my volume of oil, right? So my share of that 668 barrels was 0.37 barrels. And so how do we arrive at that, right? What you're going to do is you take the gross volume, 668, multiply it times your decimal interest, and that's going to give you your net volume. Okay, so after volumes, we talk about gross and net values, and it's a similar type of equation, right? So this property generated total gross value $52,627, right? Now, how do we get that? We multiply the total gross volume by the price is going to give you this gross value. So how do we get my share of that gross value? Well, what we're going to do is we'll multiply that 52,627 times my decimal interest, and that's going to give you this $29.79 right here. So next up, we have severance taxes, right? So severance taxes are state taxes that are imposed when the oil is severed from the ground. Basically, it's a volume-based tax. I'm not exactly sure what the severance tax rate is in the state of Wyoming, but severance taxes can range from anywhere between 5 and 12%, right? So here's the gross amount of severance taxes, which was $3,000. And here is my share of those severance taxes. Okay, so the next column on the check stub is deductions, right? So what kind of deductions are we talking about? Well, all of them are going to be listed up here, right? So you see D right here stands for deduction codes. The deduction, here's the legend right here at the top, right? So different types of deductions include compression, dehydration, processing, transportation, et cetera, et cetera. But let me give you the skinny on deductions. Okay, so typically deductions are going to be for gathering, processing, and transportation, right? So GP&T is what we call it, right? And most oil and gas leases, unless you have a special provision in your oil and gas lease that prevents the operator from deducting these charges, most mineral owners under oil and gas leases are going to be charged with these gathering, processing, and transportation expenses. Now, this probably deserves a whole separate episode, but the long and the short of it is that GP&T expenses represent expenses past the wellhead, right? So everything to get the oil to the wellhead, out of the ground, the well drilled, pumped all the way to the surface is the responsibility of the operator. But once they actually get that product to surface, they are allowed to impose charges to get to either A, transport that crude to market, or B, get it in a saleable condition, right? And so that's what these charges are. That's what they represent. So these gathering, processing, and transportation expenses are going to cover things like trucking the oil to a terminal, right? Or to a sales point. It could also include things like gathering natural gas, treating and processing it so that it can then be sold into an interstate pipeline. And what I'll say is that GP&T expenses typically are going to be higher for natural gas properties than they are for oil because there's just a lot more infrastructure. There's more processing that has to take place in order to get natural gas to market. Oil is easy. You pump it into a tank, a truck shows up and hauls it off. So if you live in a natural gas play like the Haynesville, for example, these deductions are going to be a lot more important to you, right, than say, for example, this check right here. These are oil-weighted properties in Wyoming. Now, what you can see from my check stub is that I'm actually not receiving any deductions on oil being sold from this Chassenay well, right? But if we scroll down the check stub to this Elmo, right, which you can see, this is product code number 2, which is natural gas, right? So I am receiving a deduction for natural gas. I'm being charged with number 1, which is compression. I'm being charged with number 3, which is processing. And I believe there's one more down here, number 11, which is gathering, right? So gathering, processing, and transportation of natural gas. And so you can see what's the gross amount of the deduct. I can see what the net amount is to me and really kind of how that's impacted me. But if we jump back up to the Chassenay well, since that's our example, at the end of the day, we've got gross value, we've got net value, we've got taxes, we've got deductions. What you get to is property net value and owner net value. So property net value is $46,140. That's the total amount of money that this oil and gas well produced after taxes and deductions. And my share of that net value, which is the property net value multiplied by my decimal interest, equals $25.90. Okay, so now that we've covered the Chassenay well, right, and we understand everything there is to know in this check stub, what you're going to want to do is review it for every single well that you own, that you're being paid for, right? So work your way down the list, look for errors in your check stubs, right? Make sure that the check stubs that are listed on your check match your division order, right? And go back and do the calculation to ensure that you're being credited with the proper number of acres. If you're receiving huge deductions from your check stub, you're going to want to go back and review your oil and gas lease to see if those charges are being charged to you correctly. And that's pretty much it for check stubs. So now that we've covered check stubs, what's next? Well, in the next episode, I'm going to show you how to find your minerals on a map and how to research oil and gas activity in your area. If you're getting value from our content, don't forget to hit the like and subscribe buttons. And if you have any questions for us, you can reach us on the website, mineralsguide.com, or you can reach me by email, steven@mineralsguide.com. We'll see you in the next episode.